Hey, it's me again, Dave Tester, with the Real Estate Show featuring Chris Lofthus of the Chris Lofthus Group at Keller Williams Realty, Boise. So, Chris, I ask you each week, is there a particular style of home? And when I say style, are there families with 4 or 5 kids? Are there empty nesters? Here as we get towards November now, what do you see in the last couple of weeks?
What we're really seeing a lot of, we've been seeing it all year, but, we're seeing that baby boomer downsize single level is huge right now. And kind of interesting, I think we've preached about it enough, but we're seeing a lot of people upgrade. Like, for example, yesterday we had a client of ours write an offer on a house, moving from a 3,000 square foot house to a 4,500 square foot house. And they wanted more space. And so we're seeing that, and they're taking advantage of the rates. And but basically, the discussion we had was he's moving from his house into a larger house and upgrading, and his payments changing by, $100 or $200 a month. For some people, it's a lot, but for some people, they're taking advantage of the upgrading of the house.
Are you seeing people from out of the area, or people just moving from, say, Eagle to Meridian or Meridian to the north end? What are you seeing?
We're seeing a lot of, see a lot of everything. I would say probably about 65% of the stuff we sell is out of state. People want to move here. We talk about the good news that we hear from, from all the publications out there, but it's quality of life when you move here. And I think a lot of people, with what's going on out there in the corporate world now, people can work from pretty much wherever they want. A lot of people work from home. Just talked to somebody the other day, and I heard that 50% of HP employees work at home. And so they're really downsizing with the commercial property they own too. So you're seeing a lot of that.
Yeah. Well, Chris, I'd like to ask you, because I think people are curious. You know better than any what's going on in the real estate world. Our next guest is Van Carlson, who's a principal at Concierge Legacy. Their motto is creating, protecting, and preserving wealth for future generations. Of course, Van, along with his partner Aaron, have been on our program a number of times. If this is the first time you've had a chance to hear Van, very well educated, skilled in that financial aspect of the world. And the other thing, too, I think is important. Well, I don't think, Chris, I know it's important. He's involved in the community. When it comes to Meridian, in that area, what he does, it's not a guy that's just coming in saying, hey, I want to get my rate or my commit, see you later. He's probably more active in community stuff than the mayor is.
Yeah, we were just talking about, he coaches over there at, Rocky Mountain Middle, right? Ben?
Sawtooth.
Sorry
Junior high.
Sawtooth Junior High.
I guess it could be called Rocky Mountain Middle, though.
Well, it does feed into Rocky.
Yeah, there you go. So that's fair enough. Yeah.
Yeah, we talk about Van, and he does a lot of good stuff out there, from Meridian, and we talk about the activity, and we talk about the people I like to surround myself with, and Van and Aaron are two of those guys, and kind of what their company stands for.
You can reach out to them at conciergelegacy.com. That's conciergelegacy.com. Van, first of all, welcome to the program, and it's good to have you back again.
Thank you, Dave.
We, I guess, everybody's talking about it. I don't know what they're saying, but it's the upcoming election. Whether you're on the left side or the right side, what I hear is, I just want this thing fixed. What's the effect of this election on the economy? What's going to happen?
Well, when we talk about markets, we always go to the stock market to see what it's doing. And it's really doing what it normally does in a normal election year when you have the president elections up. So it's clipping along in the double-digit return this year. And we don't expect anything to change in that arena. So and that's pretty typical of what happens during an election year at the stock market. There's a couple things, and I was able to join with you guys as well in the middle of the week with Mountain West Bank's symposium on the state of the economy, and there were some really good things brought up in that session, just basically talking about some of the historical things that we're looking at. One of them would be the fiscal cliff, and then just the Obamacare wasn't mentioned, but Obamacare has just as much impact potential to small business taxes and to selling of homes,
sure,
than as much as the Bush tax cuts sunsetting. So besides all those are the big issues. I would just tell you from the economy standpoint, I still am not convinced the election has a big negative or positive on the economy. The good thing about this year's election, I would say you would definitely have two different philosophical approaches to the economy and the mindsets our future leaders. And I think you see a big differences between Obama and also Romney, and I think people will come down, and it's been kind of interesting to watch. I hope we live in the country still where people like to bootstrap and go out and I'll make my own way. And I hope people understand which way that would go.
Yeah.
The other way is, looking for help, and I think people do need a helping hand up. But the handouts and everything that we've promised, and everything we've booked on the books for promises going forward, with our seniors, everything down to the college kids today, it's a big bill, and I just don't know if it's something we can keep up with.
Yeah, and it's kind of funny, Van, you mentioned that too. In our world, in the real estate world, we don't see, there's some changes coming at the end of the year that we don't know if it's going to, if they're going to change or if they're going to stick with what's going on. Who knows? Talk about the fiscal cliff. But, in our world, I'm not seeing any change at all. I don't see any change in consumer confidence. What people are buying or selling, people are still listing their houses, people are still buying houses. And I think they see the value in it in general because it was so low. Now, if we were in a different world and heading down that path, and we were talking that we were in a very strong real estate market, it could affect, with these changes that are coming forward, could affect our world, could affect your world, and everything that's coming down the line. And at the break, Dave, Van and I were talking about the guy at Mountain West Bank, the economist that spoke. He mentioned he had one of the questions. Van was just kind of talking and kind of laughing about it. He says, what the question was, are your kids going to live a better life? Was that the question, Van? I believe it was.
Is your kids going to have a better quality of life than we do? I mean, that's every generation that comes forth. We always want to make sure our kids have a better lifestyle than what we grew up with.
Right, and Van's comment was, now his personal opinion, and I kind of agree with him. He says, it's a different world. He says, kids nowadays, it's more important to have time off of work and hang out with their friends as opposed to wanting to, have a house and 2 boats. What he was kind of making the point. He says, so are they going to have a better quality of life?
Well, a couple of things, and you sit there and listen, and really there's a big shift going on, and I'm not really seeing much about it. And the problem is when we look at GDPs are based on consumption rate. 75% of our GDP is based on a consumption rate of the consumers.
And will you share with our listeners GDP, what that stands for?
Gross national product. So that's when you put everything that we create in the United States and you put it all in one bucket. That's what we're cranking along on. So the problem becomes is when we're used to high consumption rates, but you have generations coming up behind them, and we could talk about the 2008 and the economy going, and that happened, and we typically rebound at a much faster pace than we're doing. The problem is the consumption of goods is not coming back.
Sure.
And so when you listen to, a good example was the debate. You listen to Obama talk about, well, we got to make sure every kid getting out of high school goes and gets a college degree.
Right.
Then he talks about bringing manufacturing jobs back onto the country. And in fact, I made a joke. It's like, oh, so I'm going to have a college kid have a college degree so he can get a manufacturing job.
Yeah, and a college education
it's kind of
and debt coming out of college.
Yeah, so it's kind of like, and here's the problem with manufacturing. If they're trinkets, we can't afford to make trinkets in this country. I would say Obama was wrong about manufacturing. The largest manufacturer on dollar amounts in the world, and it's been for many, many years now, has been Germany. The reason why Germany is still the largest manufacturer of gross dollars sold on their products.
Sure.
I'm not so worried about the stuff that's being sold in our retail stores and the trinkets that are being made. They have to be made at a low price point in order to get them to our markets and in order for the consumer to buy them. But in Germany, you have good quality products being sold. So would you rather be a country that has highly educated people making very, very high good products manufacturing?
Right.
Because I'd rather win the game on selling on the dollar side, not so much the volume side.
Right.
And so that kind of gets back to our point about the kids today. It's not going to be based on volume anymore. So if it's not based on volume, it's better get back to quality.
Right.
And that's really where we need to start focusing in is on education, making sure these kids come in with better education because they're going to need it first and foremost. The other thing is I'm not interested in manufacturers that made trinkets coming back onto this country.
Right.
I just don't see how that's going to benefit any of us in the long run. So when it gets back to the consumption of goods, that number is going to continue to shrink because people are going to look. What I see, I hear it all the time, and I think you hear it too, Chris. when somebody decides to make a purchase today, they have a different mindset.
Sure.
They're looking at the quality of the product, and then they're looking at saving some dollars to put aside before they decide to go out there.
Right.
People are keeping their vehicles longer. They want to buy a better quality vehicle. I mean, all those things are happening, and here's the hard pill to swallow. The problem is when you do that, you do shrink your GDP.
Right.
Consumption goes down.
Sure.
So there's some pain occurring. But I think in the long run, I think it's a good pill worth swallowing. But, we're talking about a long time,
Right.
a long time to recover based on traditional ways of what we're measuring on the economy today.
Well, I think we're seeing different stuff too. Just like when we talk about Van's world in the real estate, we're seeing the same thing. So back when I was in my early 20s, I bought a house, and that was kind of what I was always preached on by my father. Buy a house, always own your house and the benefits of owning a house. Well, now we talk about that $90,000 to $110,000 range in Ada County. And you start looking at, over the last 11 years, we always talk about this, that closed product. So over the last 11, all those closed transactions, half of them took place last year, and half of those were cash. So you start talking about that. That's the investor. The investor's buying the income, right? And we talked about, just like you talked about Mountain West Bank, rents are going through the moon. I mean, rents in Meridian, you probably don't look, Dave, because you own your own house, and so does Van. I look because we have people that want to come short term and say, you know what, before I buy, I want to know, do I want to live in Meridian, North End, Boise, Eagle, whatever it is, Canyon County? But the point is, they're looking at rents now and they're going, holy cow, you could pull rents up in Meridian right now and it would knock your socks off.
Well, it's cheaper right now it looks like it's cheaper to buy than to rent, and that's why we say, hey, reach out to the Chris Lofthus Group. You are listening to The Real Estate Show, and our guest today is Van Carlson, the principal at Concierge Legacy. We're going to dig in a little deeper. I want to ask you about the Senate, tax changes, and then this fiscal cliff. We will make time for that as well. If you want to reach out to Van's group, you can call them at 275-8875. That's 275-8875. And don't forget, as always, if you've missed any of our previous programs, fact is we bumped into a couple earlier in the week at the event we all attended that said, hey, I missed that show, and Annette was great. She said, hey, just go to the chrisloftus.com website, and you can click on radio show and go in there, and you see all the programs are archived. It's kind of fun, whether it's remodeling, whether it's following up on some stuff that Van had talked about. All through the list, it's in there. It is the Chris Lofthus Group that puts this together. And Chris, real quick before we take a time out, just mention your team and your crew that you've got together there.
Yeah, we have a great group of realtors that work with us, and we always have Annette. And I always tell people, reach out to us. You can reach out to Annette and me both as well. Contact us at clgeagle.com, and you can always reach out to me too on my cell phone, 514-5003.
And you will be at the open house. You're going from here to the open house today, is that right?
No question.
All right, we better make sure. All right, we'll be back after this.